IAR Practice Test 2026 Investment Advisory Representative Certification Exam Questions and Answers. Question 1. Under the Uniform Securities Act, an investment advisor must deliver a brochure to a client at least 24 hours prior to entering into a contract, at least 48 hours prior to entering into a contract, no later than the time of entering into a contract, within 5 days of entering into a contract. NASAA rules require the brochure to be delivered no later than the time of entering the contract. Question 2. Which of the following is considered a security under the USA? Fixed annuities, whole life insurance, common stock, commodities. Common stock is a security. Fixed insurance products and physical commodities are generally excluded. Question 3. An investment advisor representative, IAR, is defined as the firm providing the advice, an individual who makes recommendations or manages accounts, an entity that issues securities, a clerical employee of an IA. IARs are individuals associated with an IA who perform advisory functions. Question 4. Which of the following would be an unethical practice by an IA? Charging a fee based on assets under management, disclosing a conflict of interest to a client, executing a trade for a client's account without discretionary authority, providing a brochure at the time of contract. Executing trades without authority is a violation of fiduciary duty. Question 5. According to the Investment Advisors Act of 1940, the de minimis rule applies to firms with no office in a state and fewer than 6 retail clients, an office in a state and 10 clients, more than 25 clients, institutional clients only. The de minimis exemption applies to out-of-state advisors with 5 or fewer retail clients in a state. Question 6. A performance-based fee is generally permitted for all retail clients, qualified clients with at least $1.1 million AUM or $2.2 million net worth, only non-profit organizations. No one. It is always prohibited. Performance fees are restricted to qualified clients to prevent excessive risk-taking. Question 7. Which of the following must be included in a Form ADV Part 2A? The advisor's social security number, a description of the firm's advisory business and fees, a list of all client names, the firm's political contributions. Part 2A is the narrative brochure describing the firm's business practices and conflicts. Question 8. Under the USA, a state includes only the 50 U.S. states, the 50 states and D.C. only, the 50 states, D.C., Puerto Rico, and Guam, only states with a population over 1 million. The definition of state is broad and includes territories and possessions. Question 9. An IA must keep records for a total of 2 years, 3 years, 5 years, 10 years. Standard record-keeping requirements for IAS are 5 years, with the first 2 years in the principal office. Question 10. Which of the following is an example of soft dollars? Paying a broker-dealer for research with client commissions, giving a client a cash rebate, charging a performance fee, using personal funds to buy office equipment. Soft dollars involve using commission dollars to pay for research or services that benefit clients. Question 11. A person who is in the business of providing advice about securities for compensation is an agent, broker-dealer, investment advisor, issuer. The 3-prong test for an IA is advice, business, and compensation. Question 12. If an IAR leaves a state-registered IA, who must notify the administrator? Only the IAR, only the IA, both the IAR and the IA, the client. For state-registered IAS, the firm usually notifies the administrator. Note, for BDS, both notify. Question 13. Which of the following is not a federal covered security? Stock listed on the NYSE, shares of a registered investment company, interests in a local credit union, securities issued under Regulation D Rule 506. Local/private issues are usually not federal covered unless they meet specific exchange/rule criteria. Question 14. An IA who has custody of client funds must file a balance sheet with the administrator, keep funds in the IA's personal account, notify the SEC only, charge higher fees. Custody triggers additional reporting requirements, including an audited balance sheet. Question 15. Total return is calculated as ending value beginning value plus income / beginning value, ending value / beginning value, income / beginning value, ending value beginning value. Total return accounts for both capital gains / losses and generated income. Question 16. A churning violation involves charging high fees, excessive trading in a client's account to generate commissions, selling securities without a license, failing to disclose a bankruptcy. Churning is a breach of fiduciary duty where the volume of trades is inconsistent with client needs. Question 17. The Sharpe ratio measures inflation, risk-adjusted return, market liquidity, tax liability. The Sharpe ratio compares the excess return of an investment to its standard deviation. Question 18. Which investment style focuses on companies with low PE ratios? Growth, value, momentum, index. Value investors look for bargains with lower valuations compared to fundamentals. Question 19. Systematic risk is also known as business risk, market risk, liquidity risk, credit risk. Market risk, systematic, cannot be diversified away. Question 20. An IA must update its Form ADV every 5 years, only when the firm moves, annually within 90 days of the fiscal year end, monthly. An annual updating amendment is required within 90 days of the end of the fiscal year.